Welcome, ladies and gentlemen. My name is Dustin Kircher. I got my partner here, Ben Dreicer, and we're with MHP Nation. We're back at it, and we got an amazing guest, one of our bigger guests with the most amount of properties, I think, and spaces that we've had on our show. Today, we have Eli Weiner. He's the founder of the BoaVida Group, a company specializing in manufactured home communities and RV parks all across the U.S. Eli he's grown his portfolio from more than 230 properties with over 27,000 spaces in 35 states. So we are thrilled to have Eli on the show, sharing his knowledge. And we are already discussing some stuff. He thought we already hit record, and we're like, whoa, we got to pause this because we want this on the show because he's already dropping gems. So Eli, thank you so much for being on the show.
Yeah, thanks for the invite, guys. I kind of sat on the tried to figure out the time, but it's one of those things where you just got to kind of do it. So to make the time, right?
Exactly. There's never the perfect time. So my wife always said when we were trying to have, or I was holding off on having kids.
Now we have two young adults.
Yeah, yeah, exactly.
Yeah, don't hold off on that. Just do it.
Yeah,
don't try to plan anything. See, it's like buying mobile home parks. Don't worry so much about the plan. Just do it. It'll work out. In the long run, it'll work out. In the short, it's going to be a mess. You're going to make mistakes. Your underwriting is going to be way off.
Yeah.
He's way too accurate.
Exactly. Yeah. The stuff you don't hear every day, right?
Yeah.
And getting into this asset class. So Eli, tell us a little bit more about yourself. I know I had a brief introduction, but I mean, those are astonishing numbers, right? You definitely got some experience. When did you start? When did this all happen for you?
I won't go into my whole story because I think that there's other places you can kind of find that with me, and I'll just do a quick, basically I've been involved in since I was like 20, basically dropped out of college at UC Davis. I was selling homes in other people's parks and started on the dealership side of the business. And had a family that was in real estate and stuff. And I just saw people make money and lose money all the time in real estate. So I always knew I'd be in real estate because I wasn't very good at, people ask me, well, how'd you get in the mobile home park business? Well, the number one thing is just be completely unhirable. Just make sure you have no other options. But basically I was selling homes in other people's parks. And I realized that the people that own the park, they had that continued cash flow. And for all for all my hard work of filling up spaces, they would continue to get paid for that. So, but I specialize in California and just buying like beat up parks, drug parks, going into these properties and fixing them up and putting money, and now the money that it takes is used to be replace a septic system was $50,000. Then it was $150,000. Now it's $1 million. So at least in California. But really, I kind of made a name for myself in California, fixing up parks and filling spaces. And because I had that mobile home dealership background of filling spaces in other people's parks, and then started doing it in our parks. But by doing that, buying these parks with vacancies, you could increase the value and provide, and I never tried to make a ton of money on the homes. I did actually in other people's parks in the Bay Area, but then but that wasn't a very a good tax efficient way to make money. And it was capital intensive. But basically, we would fill up these parks, triple the value, refinance, do the next one, do the next one, do the next one. So, but now we're actually it's over 29,000 spaces. The goal is by the end of the year we'll have 30,000 spaces.
Wow.
So
Nice.
I don't go to many conventions or anything. A lot of people, they go to these things and they spend a bunch of time and they pat each other on the back. But I told a couple of brokers that kept asking me if I was going to go to one. I said, no, I can't show my face. I don't even have 30,000 spaces. I'm you know, but maybe next year, maybe next year.
Maybe you'll earn your keep then.
Yeah, maybe someone will talk to me.
Yeah.
You know?
Frank Rolfe will accept you then.
Yeah, right. I bought a park from him in Oklahoma that I ended up selling. I wish I didn't, but I did. I bought it, I think, for 1.5 million, sold it for 4.5 million to another a group that was being very aggressive there, and that was like within 5 years.
Nice.
But probably it's worth 12 now. You know, so basically, you know, I rarely sell stuff. I think it's not a great strategy to sell stuff. And I think that if you look at, you know, I think that you guys are real estate guys, right? So you've been, but so you could have been trained in a lot of like bad habits. But if you just study all the super investors, right?
Oh, yeah.
All the best investors in the stock market, all these guys are doing, you know, so much better just by buying good stuff for fair prices, right?
Yep.
So, but you know, not to change the subject too much, but we were chatting before you press record about RV parks, and we have a beautiful portfolio, but it's a small portfolio of high-end destination RV parks. We love the business; it's very difficult. It's a lot. It's like the hotel hospitality business, and it's a you know it's a so and hopefully running that business makes us better at the delighting the customer piece in the mobile home business, because I think that's really important because the mobile home park business is a business an idiot can run, or a business a moron can run, as Charlie Munger would say. And you want to invest in a business a moron can run because or an idiot can run because at some point an idiot will run it, right? So if it's that good of a business, then you know, then your money is safe, right? So, but the goal is to, you know, delight the customer. And so if you can bring that type of hospitality and provide a better service and a better product, you know, I think, and especially if you have if you're not just going in like a lot of these syndicators, you know, they need to buy stuff and make money, and then they need to, a lot of times the numbers don't work out like they think they're going to work out.
Yeah.
And then they need more money. What do? They sell it because then they get a fee, and then they go do it again. So I don't think that's the best thing for the people that are living there.
Yep.
So, you know, we have this buy and hold forever mentality, you know, make the grandkids useless, but not worthless type attitude.
Yeah.
I haven't heard that. That's great.
That's a good one. Yeah. No, I like that. Your thought on that too is, you know, take in what you've learned from the RV park side, which you said is the hospitality. It's an outdoor hotel, basically. It's how you have to kind of treat it, right? But you take that same aspect into your manufactured home communities, and they're not tenants. You're creating residencies. You're creating a community, and so that, you know, definitely can transfer over and help out with your manufactured home side.
Yeah.
So what are you doing from the RV park side that you're kind of transitioning into your manufactured home communities?
Well, the customer service. So we actually have a pretty robust marketing team because so I've got a big map in front of me here, but because we're coast to coast, we broke in the way that we're organized. We've broken it up, but we've got 3 marketing gals that are all pretty phenomenal. And then, well, actually, there's 4 of them, and they do these trainings to just keep, you know, and they had one today actually, to just keep everyone kind of motivated and inspired to delight the customer. You know, how are we responsive? How are we answering phones? How are we, like, the basics, the blocking and tackling that on the MH, you can get complacent, you know?
Yeah.
So, and then on the marketing, because we are aggressive on bringing homes in and keeping the spaces occupied, and then because we're aggressive on bringing, in some markets, we have a bunch of park-owned homes, so we'll rent them, we'll sell them. managing that marketing spend. Again, it's not as simple as a Craigslist ad what it was when I was doing it, right? So, so it's like a volume control on the Google ad and the Facebook Marketplace, and then so if they're not constantly tweaking that, then you're losing money, right? You're losing leads or you're losing money. So it's like that constant. But in the RV world, it's faster. It's so. Yeah. Now, if you just buy mobile home parks in great markets, it's going to move a little bit slower. There's always you're always going to be occupied. Or if you buy a rent control property, it's like, please please have some turnover.
Yeah.
So it's just a different business, and that's the other thing is, if I hear some of the syndicators, some of these guys, when they talk about the business, and they're like, well, don't do that. Don't do park owned homes, or don't do, okay, well, just buy less stuff then, like buy less stuff and pay higher prices.
Yeah.
But there's so many different ways to run a different type of park. So you can't really, you have to be a little bit flexible there. And that's kind of what we've seen.
Yeah. I like that. Yeah. Every park, when you're looking at it, when you're underwriting, is like, okay, there's so many different scenarios on how you can underwrite it to benefit, like you said, there's POH, 2H, how long do you keep the POH, or you do RTO? So, being flexible, I think, in your acquisition, I think makes a big difference. But
they're a different business. They're different business. And that's why each one has to be kind of underwritten differently, and the speed that the thing's going to take, and yeah.
Does that mean you have a lot of park-owned homes? Are you in that business as well? Will you take a property that's all park-owned homes and keep it that way, or are you always trying to offload?
Well, it depends. So one thing that we've been very successful with is buying parks from a family operator. And I hate the term mom and pop. They always say mom and pop as if these people aren't doing a better job than us. Like when the syndicator goes and they say, oh, we because of our scale, we're going to do a better job than them. But if you guys start buying RV parks, you'll realize that's not a thing. No one's running that RV park that has a big scale compared to the mom and pop that are there, just
24 hours. Yeah.
No, don't tell me your scale is going to make you a better, that's not going to happen. You're going to have way more problems than they have because they're like living there.
Yeah.
So, and that's true with some mobile home parks, and some it's not, right? So, but it's more true with the RV that you're not going to do a better job necessarily than them, that you need to strive to do their job that they were doing. And if because normally you go into a mobile home park with problems, you got to replace the team most of the time. Yeah. You go into an RV park and it's well ran and it's a mom and pop operation, you do everything to keep that team because they're doing great. And that's what we've seen. And that's kind of worked amazing. So, but what we do with these, so we bought some parks. I'm flying out to, I think Missouri and Louis and Kentucky in 2 weeks on a trip to visit a bunch of properties. And we had a couple really nice parks that were all park-owned homes. So you go in, you buy it, but the nice thing is there was no loans on it. So we sell the homes at quite a bit of a discount, and we give them a discount. So if they're paying, $850, we might sell a $30,000 home for $13,000. And then we just basically, and then they may have had 350 space rent, and we make their space rent $550. But now they got such a good deal on the home, they can actually pay cash and buy it. So we can go in and convert a park like that within a couple of years. and we're in really good shape there. So,
Super smart.
and yeah, and then there's some, but the thing is, if you have a park where you're just going to bring in a bunch of brand new homes, if it's brand new home, just rent it, and you can try to sell it, but don't waste time. You know, just get it occupied and then go back to them and just and see if they can buy it later. You know, just fill it with good people, and don't be too aggressive on the prices, because if you worry about the extra $100, you're just going to have more turnover, and it's going to take you an extra month. And you and I can we can sit here and do the math, and we'll understand that. But you have to take your time with your team, because they don't want to disappoint you. And then what they want to do is they want to make sure that everything is covered. But the speed matters so much. You know, if you can fill up a park a year and a half, 18 months before you were planning on having it filled, you just made, cost you an extra 100,000, but you made an extra $1 million.
Yeah.
So
that's a great way to put it. Yep, exactly. So when you're underwriting these, and there's POH in there, are you only accounting for the space rent, or are you putting some type of, I guess, weight on the POH income?
It kind of matters on the quality and the age of the home.
Yeah, got it.
So it's not like, if you gave me one deal and we looked at that one deal together, I could show you exactly how you should be looking at this, right? And here's what's crazy that I joke about. I fly a lot. I like to fly, and I just got my pilot's license,
Nice.
but I've been getting flown around to acquire mobile home parks since I was 20, whenever I don't know, 22, 23, 24. I had a cousin that still works for me, and he flies me around, and I have but we would look at mobile home parks, but I'm always in the sky. And
a cousin is a pilot. It sounds like your cousin's a pilot and flies you around, or he said, oh, that's awesome.
Yeah. So we have and then we've got 2 other pilots here in the office. And so I just got my license, but because I was always too preoccupied to really focus on that, but I wanted to. So so I finally got that done, and I'm working on my instrument now. But now that you guys are involved in mobile home parks, you'll notice when you're flying, mobile home parks are like the easiest thing to see from the sky, right?
Yeah.
But it's amazing what you get. Just if you just Google Earth it, you can look at the roofs of the homes, and you can tell so much right there. It's right. You can basically tell the age of the homes by the roofs.
Yeah.
So if you really know, if you've visited and been inside it, so anyway, it's a little bit of a tangent, but I hate to say, because I've got I've got this park with all these park-owned homes that we've sold in Georgia, and I'm sure that we underwrote those homes completely different than how we'd underwrite, if like we just bought the Lumberton deals that were auctioned off from Fannie Mae. It was probably like the first Fannie Mae auction, like, I don't know if it's ever, for a mobile home park. Yeah. But and we bought the parks for, there was one that was like 242 spaces with like 211 park owned homes. Well, we bought the park for, it was like $39,000 a space. So whatever that comes to. So what do you think? And those homes were all 2000 model homes, like 2019, 2020 homes, right?
Yeah. Yep.
What are those worth? 3-bedroom, 2-bath. If we just want to liquidate them fast.
Though you said 2000 built, well, 2000 built, I'd probably put a $7,000-$8,000 price tag on it.
78,
7 to 8.
7 to 8.
I was saying 20,000 was my guess, but
early 2000.
No, I'm sorry, 2020 to 2019.
Okay. Yeah.
2020, not
these
2000.
Are new homes.
Oh, I thought you said 19. You said 1999.
Most of them. I did. I get my numbers. I get my numbers mixed up. Okay, so there's some that are 2019 homes, but most of
wow.
them are 2020 homes.
Yeah. So 15 to 20 as like a liquidation. Yeah.
I mean, they're brand new. So if you buy that home brand new, you're going to be what, $45,000?
Yeah.
Yeah. Yeah.
And then you got to set it up another 20.
Hmm.
So yeah. So 35, I mean, 35,000.
But you didn't give it any value because you were buying the whole portfolio and the whole portfolio made sense. So what's the game plan with that one, for example?
Well, that one we'll rent them, we'll sell them. Basically, you just fill them up as quickly as possible. But that was a good example of, and I'm sure there's a lot of people suffering from this. In 2019, 2020, when COVID, what happened was people were fighting for homes, and then COVID happened,
Hmm.
and then all these homes came out, but the prices got crazy on the home. So they went up about 35%. So now that $45,000 house went up to, $55,000. Like, it didn't make any sense. So that just wiped a bunch of people out. So if they didn't have the means to figure out their way through that. And so I knew that something like this would pop up, and it did, and we were ready to rock and roll on it. And that was probably, I think that was the third auction that I purchased property. So I got the two big ones on that deal. But basically,
Nice.
if you sell off those homes, you pay for 80% of the park or something.
Yeah. And that 1520, that was like liquidation. Like that's just if you want to get rid of them super quick.
Yeah,
That's
and the space rent there, I think, is high fours, low fives, or something.
hmm.
So, and we have a couple parks in Fayetteville, North Carolina, that we bought for, I think it was like 7 million, and we just got a 16 million appraisal and a $10 million loan. Just refinanced. That was a 2020 purchase. So, and that was another
Nice.
example of where we filled that park up pretty quickly, and two parks, we filled them both up, and refinanced, got all the money out in right about 5 years. So,
Nice.
but we still have a ton of park-owned homes because we brought in all brand new homes, and then we sold off a bunch of used homes for lower prices, probably more like the 5 to 15,000 price because they were older.
Yeah.
So that's where, um, if someone's telling you don't do park-owned homes, well, I mean, that was
Why? Yeah.
yeah. But
Now
you have to be good at it.
hmm.
It all depends if you want to work.
Yeah.
The other thing, people ask me when I do stuff like this, well, aren't you worried about people knowing your secrets or knowing
Hmm.
I'm like, I can tell anyone anything. Like, if they want to outwork me,
Yeah.
most people don't, right? They just want to raise money, buy the thing, hope, raise the rent. They're not going to go,
It's a very
really.
small percentage of people that will actually put anything into action. So
Yeah.
yep.
And I think you started the show perfectly by giving us the realistic what happens when you do get into the first deal and how much hair that you have to deal with and all the hurdles and all the unknowns and learning the mistakes for the first time. And another thing you said before the show, which the RV park, we have a park and we have are now four. We closed on one other, actually, in one of your territories. We recently closed on a 75 space in Bakersfield,
Oh, okay.
California. But that's going to be we're going to have to completely upgrade all the utilities on that
It's
particular.
basically a development.
It's basically a
Yeah.
development. But anyways, that one RV park probably it falls right into the 80-20, like the amount of brain power and headache from that one RV park. Just from one is the management, two, just being in California, how many different licenses and permits and testing and quarterly testing and annual testing for the septic, for the well, all the different our sales permit. So that one is significantly more cumbersome than I think all our other parks together
Right.
too.
So, so I'm curious, that being said, if you had to pick one, either RV park or mobile home park for the rest of your career, what one would you pick?
Well, because I value my time so much, and it's some, even though I'm
I already know the answer.
even though I'm a workaholic, um, I, it's not like I'm going to do different things with my time necessarily, um, but here's the thing though, you can't take the chances with the RV if you didn't have the foundation of the MH. So the MH can pay your bills and you can count on it, right? And what's interesting is when I decided to start, because I always knew every single year as more people got into the business and it became easier and easier to raise money. And once people figured out, I figured out that the accelerated bonus depreciation in 2017. My first park that we used that with was the Borrego Springs. People got, someone, put in $500,000 and they got on that deal was probably like $1.5 million a loss. I mean, it was insane, or 1.1 or something. It wasn't one time or one, it was like 1.8 times or something. So back when you could, buy a 6.5 cap and then get really good leverage, it was, so, but then it was after 2020 that people figured that out. Once they figured that out, then you had not just all the big players you were competing with, the people that were already in the business you were competing with anyone, because anyone could raise money at that point. So, but I think it was after that I fell in love with that park, Borrego Springs, in the Springs of Borrego and the Roadrunner, that I thought, you know what, let's do an RV brand and let's try to build a national RV platform and see if we can do a good job. So I got some investors together and I said, hey, this business is going to be, I mean, we don't know how many good deals in the MH we're going to be able to find. We always have to make the assumption that every single year is going to be more and more difficult, right? I think it'd be, ridiculous of us to think that, that's the other thing. These guys that go out and do 150 or $250 million deals with these private equity funds, like they're going to find these deals. They're not, they may, but they're not great deals, so yeah. So the assumption should always be there's going to be less deals. If it's anything other than that, it doesn't make any sense. So, and because the whole idea of it being a great business is they're not building more. So how could there continue to be all these deals? So basically, I think it was maybe 2000. I think it was like 2019. I just got with some investors that I knew trusted me, that I had made them a lot of money, and I thought, okay, well, let's see who wants to do this. And I just picked a few of them, and I said, okay. Not all of them remember this, by the way. Some of the deals aren't. A lot of deals are like home run deals. I mean, phenomenal deals, but especially because I was buying, earlier than now. But I said, hey, here's the deal. We're going to go buy RV parks. They're going to be cyclical. The operations are tougher. The expense ratios are higher. And the goal is to see if we can get much higher cap rates and better deals. And we're going to screw up a bunch, and we're going to learn the business, and we're going to be ready to do some sort of consolidation where once we actually are good, then we can go buy a lot of stuff. But the other thing is, in a recession, are the expectations of getting great deals on MH? No.
Yeah.
No, that's not a thing.
Yep.
Again, that's why the business is so great. So that's the problem, and that's the good thing. So, but that shouldn't be the case with RV. The problem is then COVID came, everyone bought an RV, and then everyone got excited about RV, and then everyone started buying RV. So then RV parks were going for the same cap rates mobile home parks were going for, which, doesn't really make sense. So we haven't been aggressive in RV in the last couple of years, but I moved since then to a fund format, but in the early days of that, it was, let's just get a few guys together that are making a lot of money already, and we want to make sure we always have something to plug into, and let's see if we can build this business. And so some deals work, some deals are really still challenged. But so it'd be cool. I want to keep buying them, but I think that you got to be patient and you really have to get a great deal because there's so many things that are out of your control.
Yeah. Well, you said it's cyclical. It's a hospitality business, so there's more risks of people just picking up and leaving. There's also multiple different types of parks, so it kind of really depends on the park you have. But yeah, there's like Ben was saying, for every 5 parks, it's like compared to mobile home parks compared to one RV park, and the amount of work you do, it's crazy.
Yeah.
So what you have an incredible operation. Can you talk a little bit about the hierarchy? How many people do you have at your organization? How does it operate? How do you operate so many parks and so many spaces? And I'm sure a
Yeah,
ton of
it
people.
sounds like you're very involved
Well,
still.
we have, all um, the team spans. You have the park teams, and then you have regional managers, and then we have what I call zone leaders. And the zone leader is there to serve the regional in the sense that that just be decisive and help them with anything they need. So the idea is to split me in basically 5 or 6, positions. So we split the country up. So I think about it like this. Jesus had 12 disciples, but one of them didn't really work out so great. So how many people can you really manage? So if you think about 10 to 12, so if you have a regional managing 10, because you'll see some of these groups, they have like 20 properties under one person. Now, if they're in a phenomenal area, they're 100% stabilized, there's nothing to do, maybe that's a thing. But if you're buying, breaking stuff, and you have an acquisition team like mine that's out there gunslinging and stuff like that, it's we're gonna buy problems,
Mhm.
and they're gonna have to solve problems and fill spaces and do, there's just a lot of work if you want to actually be buying stuff. So, but so if it's those type of properties, you really can't give anyone more than 10 to 12, and then think about how many people they're managing, or teams they're managing. And I think if you kind of keep it under that 12 number, then you can expect great things from them. And but basically, we have, I think, 5 people that are there to serve the regional managers, and then we have a whole homes team that just is also there to serve the ops team. So
Mhm.
we're probably the top 5 order of homes for Clayton and Champion across the country. We're probably the top 5 largest borrower with 21st Mortgage. And and then we have, and our homes team includes like titling. Like we've got some gals that do the escrow and the titling, and just, I mean, what a mess that is. You go buy a 200 space, 240 space park with 211 titles, right? So, and then if you're constantly selling, I mean, we're selling, how many homes a month? I mean, it averages. I get an email every month of how we did and all the bonuses, and we sell between 55 to like 92 homes a month. So, and not all those. I would say usually it's about 50-50. 50% of those are sales, and 50 are like new homes and rentals, because we don't rent used homes, but we'll rent brand new homes. So we'll occupy basically 55 to 92 homes, I think, every single month. So 29,000 spaces, we may still have, I think it's less than 3,000 vacant spaces now. It's probably closer to 2,500, but you just keep eating away at that.
Yeah.
And then, but the big key, are you guys Elon Musk fans?
Yeah.
Yeah, definitely study his stuff.
Yeah. So I would recommend so the 6 productivity rules.
Oh
Elon
yeah.
Musk, 6
Hmm.
productivity. So he has a chain of command thing that he
Yep.
talks about. Anyone following the chain of command will not last long at Tesla. If you've got to go to the VP, who has to go to the manager, who has to go to the other person, who has to go to the other person, uh, you know, then no good. If
Yeah.
you're worried about stepping on toes, if you're worried about any, basically the information has to get directly to, like, I want an on-site manager. They can email me anytime. They can call me anytime. And if they just loop people in, that's great. But anyone that's going to get butthurt over, they don't belong at our company. That's not the culture. Because again, speed matters.
Hmm.
And what you do is if you're managing like this, right, instead of a pyramid like this, you you have basically blockers, and it just screws everything up. And so you just want people to, and then I'm setting the tempo, right? So if the zone leader, the regional sees, if an email comes to me, I just got an email on a park in Iowa. They said, hey, we've got, even though these are mobile home spaces, we've got 10 RVs that want to move in, and we've got this many spaces that we can make RV ready for, $3,500 for all of them. And I literally, as soon as the email comes in, I respond within minutes, right? So that's the type of expectation that everyone in the company has to have, that if you can do something to go fill 10 spaces or whatever, like, and I'm going to get back to you tomorrow. Are you freaking kidding me? Like, so now that dollar amount was actually well below what the regional or the zone, but I think it came to me because it was maybe a change of strategy. I didn't even ask, but I just said yes.
Yep.
But they would have, up to 10,000, they would have just been able to do that. So but when you first start your company, you're freaked out about these little dollar amounts,
Hmm.
because you're like, if I lose $1,000, I'm going to go broke, right?
Yeah.
So, but now it's like the speed matters way more than saving $100 or $1,000 or whatever.
Economy of scale, right? It's kind of the whole reason you get into the bigger asset classes, and then like you're talking about the chain of command, that's just doesn't
Yeah,
make sense at that point.
yeah. All of his, but a lot of times when I interview people, because the issue is you got to hire fantastic people. But when
Hmm.
I hire them, so I'm more involved in the hiring than you would think, especially at the regional uh, level. Um, I don't know if I can. Yeah. So meetings. Elon Musk 6 productivity rules. I mean, this is such gold. When I see people in meetings, I want to like herd people out of there. Like, get out of here. We're just so, and they have good meetings. I mean, there's definitely a lot of good to the meetings, but just getting the culture of, if you're sitting in a meeting and you can't contribute, just click off and get out. You are
Hmm.
not offending anyone. You're just wasting time if you're sitting there. And so, but the problem is we're all programmed the complete opposite. And you will literally have these conversations with your team of, get the hell off that meeting. And then they'll be like, sitting on the meeting. And then
Mm.
later on, they'll say, yeah, I don't know if that was a good, like, why didn't you get off? So you have to just totally change the culture to pull that out of everybody, even the chain of command thing. So I'll read that to people. I'll read the ditch frequent meetings, next big meetings, leave a meeting if you're not contributing, drop jargon, don't use acronyms and nonsense words. I, it's
Coming
just,
from the tech world, that's yeah, that's all they're all about.
well, the pilot world, it's like brutal.
Oh yeah.
It's insane. So, um, but just but like getting the communication to just, delight the customer, delight your departments. So that's the other key to really having a great company is, we've got this, uh, my first partnership, we had, accounting up here, and then we had the operations over here, and then we had the marketing over here, and everyone was segregated. And I realized that that was just so terrible. I did because it was a cool building. We built a building out, and I thought it was neat. And but I didn't realize how much collaboration and ideas and innovation and all these things that we were just losing and wasting. So now, um, basically, it's all open and it's super cool and fun. And we've got this giant kitchen area. We got a giant Traeger, and we do, a couple of
Nice.
times a month we're either barbecuing or bringing food in, or but you just got to get everyone talking. And what you want is ops to be able to just go like this and yell over at accounting and say, what is this all about? And then in a sense, it's like, I want you to argue. I want you to discuss. I want you to, you know, so that was my long answer to your organization. Um, but I think if you take a look at the Elon Musk stuff, it's really, I think that's why he's been so successful. And,
Mhm.
right, the first principles, why are we doing stuff just because it's always been done like that? How many times have you seen stuff like that? It's like the most retarded thing ever, just.
Mhm. Yeah. Yep. Yeah, I think it's kind of a traditional thing, like, but it doesn't make sense to me. Even working at the hedge fund for a while, I was like, there's meeting after meeting. I can't get any work done because I'm in a freaking meeting. And then I see my wife, and she was an executive assistant for a tech company, and how many meetings those executives are in. And I'm just like, when do they get work done?
Right.
Like, unless you're working 12, 16-hour days, even then, it's still, I was working 12-hour days at the hedge fund and it still couldn't get everything done. It was crazy.
Yeah.
Just because they want meetings to talk about numbers and this. It's like, well, look, it's on Salesforce. Here's our I forgot what it was called. Basically with all our KPIs. I forgot what the page was called. Like, why don't we
Right.
just look at that and send out
Well,
an
your
email?
acronym.
Yeah, one of those acronyms. Yeah. So
Yeah. So, but it's almost natural, or to get wrapped up in that, and you'll start going that direction as you get bigger,
mhm.
and the communication will be more going through, and then you just have to stop and just reset it and fight that culture.
Did you get
Yeah.
some high level coaching? It seems like you're like almost at the Elon Musk level. You're almost there. How did you get there? What was your path?
Not even close. Um, uh, well, I wouldn't say I've got really any. I've gotten very little. There's a couple CFO guys I've talked to. The founder of BJ's Brew House. He was, but I had spent like a couple of days with him, but um, on a surf trip. That was cool.
Nice.
Uh,
Nice.
yeah, he's a neat guy, but not really. The thing is, I read a lot of books, and I used to read. Used to read a ton of books. Now I'm just addicted to YouTube. Um,
Mhm.
so, but the thing is, if you just study, um, if you just study all the super investors and what they're doing and how they run their companies and what they value, so
Yep. Yeah. You ever listen to the podcast, How I Built This, or The Diaries of a CEO?
now
Oh, yeah.
I've heard of how, yeah,
Great podcasts that, gets you into the mind of people starting businesses that obviously are very successful at this point, and just, the different ways that they run their businesses. And there's so many different ways of doing it, right? And managing. But I've noticed, I don't know if it's because of Elon, but I've noticed now a trend where it's kind of saying things like over amount of meetings are causing detrimental effects to businesses because they can't pivot as fast, and you know certain businesses got to be able to move quickly. So yeah,
yeah.
it's interesting to bring that up.
Yeah, so I think that just if you study, and I've heard other people say this, but if you basically just if you pick billionaires that you think probably have good, morals, then and just study. It's the beautiful thing is you can just find so much information,
Hmm.
um, on all these guys, and you just listen to them for hours and hours. I mean, you can listen to Charlie Munger
Oh
or
yeah,
Warren Buffett.
what's his
Um,
book, The Almanac or something like that?
Charlie,
What's it?
yeah, yeah, Charlie Munger's Almanac or something.
Yeah,
Yeah,
yeah.
I have I have a mural I had done. I don't know if I can get you guys um, that's that I had commissioned.
Are you
Um,
at your house or are you at your office?
I'm at my office,
Okay.
so
Oh,
but
nice.
there's a mural up there. It's called the goats.
Mm,
You really
nice.
can't see it, but well, you guys are California guys, so you might know David Garibaldi. He was
I don't.
famous from doing the upside down paintings and splatting everything, and he was on like
Mm,
what's the uh, America's Got Talent or something like years ago. But he's out of
okay.
Sacramento, good dude,
Nice.
and yeah, so you have like Djokovic and Warren Buffett and Michael Jordan and Kelly Slater and the goats, so
Just
everyone
yep.
gets to look at these paintings. It's Al Pacino, you get the best of the best. Um,
Is it Jordan or LeBron?
it's
Oh, it's Kobe. What are you talking about?
Or Kobe? Yeah.
yeah, and then Brady.
Okay.
So my wife's a big Patriots fan.
Nice.
So, but anyway, to kind of reminds everyone in here that
Yeah.
that'll be the best. But yeah, I think you know what I did well was I just looked at what people were doing wrong. I
Mm,
think that's maybe I don't want to pat myself on the back too much, but I think that wisdom, right? There's experience and then there's wisdom, right? Is wisdom learning from other people's mistakes?
yeah.
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 No.
There, gosh, I used to read a lot too. Not as much now, but there was another book that was like millionaires mistakes millionaires make. Have you heard of that book? And it was just kind of thing. It was a book about these different businesses and these operators that failed, but how did they fail? Like really in depth, and you just learn from
Mm,
those mistakes, right? It's a
yeah. 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 I recall something like that actually. Billionaire. Yeah. I think I may have, uh, the conference room is right behind me and I've got a big bookshelf of stuff. And actually
mhm,
one of my first brokers that sold me my first park, he lives in Florida now. He used to live here. And he asked me, he says he has a grandson. So I last night um, I sent him a bunch of books, names of books and people that I thought he should. Uh, his grandson's in junior high,
oh, nice.
so Yeah, I told him.
You have to say the books now if you're gonna start with like that
I
start.
don't. Well, yeah. So Peter Lynch is one of my favorite investment guys. I told the
Okay.
make sure the kid, make sure that he, if you watch anything on Peter Lynch, that's the other thing too. I mean, I love stock market investing. I think that people, and it's a different puzzle.
Hmm.
But I think that what people don't look at, and when you look at a mobile home park or you look at any real estate asset, and I think again, this is where the real estate guys, like the old timers, like my dad and uncle and people I've seen make a lot of money and lose a lot of money, um, and or they just get stuck, and then they get stuck in the world of, well, we used to buy it for this cap rate, and now we're not doing anything. I'm just going to play golf, right? So they're just not, they never studied these investors, and there's a whole list. I mean, there's websites like this, like dataroma.com. You can go to dataroma.com and look at all these different super investors and what they're investing in on a quarterly basis. There's websites like that where it shows, where you can get ideas, or you could basically verify whether your idea is the same idea, you know, um,
Yeah.
if you walk around and you see everyone in Lululemon pants, and you just happen to be watching the stock, and the stock of Lululemon's getting crushed, and then you figure out, well, why is it getting crushed? And then, well, what do we look at, with a real estate investment? Like because the big problem with the mobile home parks is there's no volatility, right? And that's why we try to do RV.
Hmm.
So really, you want a great business, and then you want volatility on a business that shouldn't have volatility, but just happens to have volatility. And on that day that it has volatility, you just happen to be looking at it with like a bunch of cash.
Yeah.
Yep.
And then, right, put out, you know, so that's fun, right? But that keeps you kind of like, and then
Hmm.
and the other thing is, I think also, if you just are only doing these one deals, um, I think that kind of screws you up, because what's your benchmark? What are you comparing it to?
Yeah. Yep.
You know, would I rather buy this park for a 4 cap? Now, if there's really great upside, maybe I would. But would I rather do it at 4 cap, or would I rather just buy Adobe stock right now?
Yeah.
Which one?
Yep.
Which one? They're both great companies. They're both reoccurring revenue. Uh, you know, and then you look at, is the stock, yeah, is there more shares, less shares? And then what's the debt? And is the debt going up? Debt's going down. And then, so you look at all these things, and you can, but it helps you kind of look at, I guess what I'm saying is, a traditional old school real estate person is not opening up their mind to all these
Hmm.
things. And I think it makes you a better investor in any real estate asset class.
Yeah. When
If
you
you,
understand the bigger economic factors with stocks and real estate, and yeah, if you're looking at how those are intertwined, yeah, you can make better judgment calls, I think, right? Is that kind of what you're thinking?
yeah, it's part of your education.
Hmm.
Otherwise, you just go play golf or go fishing with your friends, or what do you do?
Yeah.
So how do you keep challenging yourself? And also, you have to be patient to get the good mobile home park deal, you know,
Yeah.
or you just go take a bunch of money, and then you overpay for stuff and charge fees.
Yeah. Yeah. We were just talking about this yesterday, that, multifamily syndicators, the only way they're really making money right now is they're charging an acquisition fee, a management fee, and a disposition fee, because there's no way those things are spitting out the cash flow.
With apartments.
Yeah.
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 And you see it too with some of the syndicators in the mobile home park space too, in RV park
Well, yeah,
space.
if they get negotiated on,
Mm-hmm.
The way I said that. So, and they have like an 8 to 12 pref or like some sort of 12 hurdle. The incentives aren't there.
Mm-hmm.
You get paid to buy, you get paid to sell, and you get paid to raise money. So you don't really get paid to execute.
Yeah.
So yeah, our structure is different. So we do, I don't know if you guys ever saw one of our fund presentations, but you go ahead and email me and I'll shoot it to you and you can read that, but it's different.
Nice.
What we do is we do typically a 5 pref, which is a much lower pref than everyone else. But we do no acquisition fee, no disposition fee, no asset management fee, and no fee if we get a loan. So I could basically buy a park, and so the way it works is it's almost like you're giving me a loan at 5%, but the heat on the loan is you get 100% of the cash flow from the business until you get all your money back plus 5% per year. And then you get 50% of the business in perpetuity. So I could basically go.
Yeah. Nice.
I could go, the goal is as quickly as possible, right? But I could go 6, 7 years and not make a dime on that deal.
Mm-hmm.
So, but me and the team, we're highly motivated to buy that park for 10 million and make it worth 15 million so that we can refinance it at 10 and then get all the money back out to investors. So investors like my structure. The typical real estate guy that's been buying into syndications, he doesn't get it because he's like, oh, you get too much. Oh, you get too much. I'm like, yeah, but the incentives are right because, and that's what Charlie Munger always says, show me the incentive and I'll show you the outcome.
Yeah.
So, right. In other words, we are highly motivated to complete this project. We just refinanced in the 2020 fund. We just refinanced 2 parks in Coalinga. In California, we refinanced a park in Shafter. We refinanced a park in the desert. We refinanced the Fayetteville properties. So you have how many is that? It was like
That was 6.
Yeah,
6.
that's a big refi. I mean,
Yeah.
we pushed out to investors. This quarter was a record. The previous record was $23 million. We pushed out to investors $25 million this quarter.
Let's go.
Yeah.
That's not a small number anymore, right?
No.
And it's not going to be like, it obviously that's because we did a chunk of refis, a good chunk of refis. But yeah, it's a good business.
Yeah, for sure.
So, but it's a better structure to do it that way.
Mm-hmm.
I think, but some people just can't do that because they're not patient or they can't negotiate it. Or they have to they have to drive a nice car or they have to have a nice house. I still drive a Toyota Corolla.
Nice.
It's a nice Toyota Corolla. It's a 2017 50th year anniversary. My wife does worry because the chicks dig it.
You drive it to your helicopter and then you take it to your helicopter where you need to go.
Well, that was the joke. And my cousin does, he does tell that story that for years, because it's like my 4th or 5th Toyota Corolla. Because I used to lease them because you could lease them for it used to be under $200, but it's like $200, $240. And you would get like this great deal with 15,000 miles a year and they would take care of everything. And it was just the best thing you could do. So I had basically I had a work truck because I used to run the construction and set the homes and do all that stuff. So I had a couple of work trucks. And then after that, I had Toyota Corollas and that's it. But the joke, because because was that Eli will drive his Toyota Corolla all the way until he drives it to the tarmac, until he has the jet. So
Nice.
yeah.
Well, Eli, we're approaching an hour here, and I feel like we could talk for hours, and I would love to. I want to respect your time, and maybe we can have you on another show or something. But I feel like we could almost do like a philosophy show. I love it. You're very educated and open-minded, so it's been an awesome conversation. But before we go, is there anything that you would like to share with any of the guests before we take off?
Not off the top of my head,
Yeah.
I think, if, I think there's a lot of, there's not one way to do it, I guess, to kind of sum up several things that we talked about, but there's not one way to do it. And hard work and time will fix a lot of the problems. So,
And can people invest in your deals? Can they bring you deals? If they do
Do you
have
partner
deals,
with
if they
people?
do have money, do you partner with people?
yeah, I think that there's some syndicators that should probably be bringing me deals, and we should, because our capital structure is so much better. And one of the things that we're looking at is handling the back of the house operations if they want to handle the front, because maybe there's an area they could do a better job than us. Maybe not, but the back of the house is completely set up. And then obviously if someone brings us a deal, we could just pay them a finder's fee or commission or whatever. But or just invest in it. So, but and then if you're interested in investing, you can go to the BoaVidaGroup.com, and there's tons of investor information there. There's a kind of a if you basically sign in there, then you'll get the password and you'll be able to see previous deals and a lot of really good information. So
Nice. Very cool. Well, again, appreciate you coming on the show, sharing your knowledge. It's been fascinating listening and talk to you and learning your experience. And like I said, I could do this for hours talking with you. I know you don't have the time, so we're not going to ask for that. But yeah, again, thank you so much for coming on the show.
yeah, thanks guys. That was fun.
Thank you.
All right.